Hey folks, it's Rod with Power Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news and interviews. Also home to the best MJ community. It is Tuesday, June 25th, and the Oilers lost. Moment of silence, please. Unfortunately, it is what it is. It was a shitty day today. Not going to lie. Definitely pretty rattled, and we came so close, but just goes to show you how well we fought, and it wasn't over. So I was with my daughter and my girlfriend and I think there was like a couple dozen people at a house. We were all watching. So it was pretty heartbreaking, but they played well. In today's video, we're going to be discussing Canopy growth. We'll bring up the CGC chart and we'll take a look at the technicals and what to expect in terms of price action in the days, weeks, months ahead. But as always, this is not financial advice. This is for entertainment purposes only. I am not a financial advisor. You should never buy or sell anything based on anything that I say or write. And full transparency, I do own CGC in my portfolio. Before we get started, make sure to smash the like. I would appreciate it. If you're new, you can subscribe, take the bell, all that good stuff. Also, you can follow us over on X, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. And just in case we ever get shut off here on YouTube, censorship is a real thing these days. And we also post our content on Rumble. If we take a look at the CGC chart here on the daily time frame, I was mentioning to a Power Group member, you know who you are, that we were looking at this together. And it's a textbook bear flag at the moment on the daily time frame, which is not great. We're also getting close to daily oversold, which a lot of names have already done so. And an example of that would be MSOS ETF. You can see here we touched down on 30, just under at 29. Anything 30 and below is considered daily oversold. I mentioned that was more than likely going to be the case, a couple weeks ago, and that would be a nice area to target after that big bull move that we saw. So in my opinion, we're getting very close to a bottom. We do have an inverted head and shoulders as well on MSOS. I just posted a video about that, so you can check out the in-depth analysis. I won't go into it again in this video, but this one will be centered on CGC. So it's looking like we could see about a little over 16% more downside from current levels. Plus we closed at the low of the day today, not looking good. So when you see MSOS and other, let's just say you only own CGC and you're not looking at the other names in the space, well, you're not really getting the full picture, right? So if MSOS is tracking all the major names in the US, that's just an easy way for you to blanket see everything, right? If just look, you don't even have to look at all the individual names in the US, just look at MSOS, and in Canada, look at, CGC and Tilray, and maybe, High Tide and SNDL, because they're a little bit more of the diversified and different aspects of the industry. So that gives you kind of that whole encompassing view and bird's eye view. And then you can look at what they're doing, and if other names haven't already done so, then it increases the odds that they would likely follow suit, right? So at the moment, lots of names are in bear flags out there, lots of names heading to daily oversold. So we can apply that same logic and thesis to our technicals on CGC and say, okay, the daily bear flag confirmed when we lost the support here at 677. So it was high, low, lower high, weak bounce, didn't get above the critical level there at $8 in the 0.382 fib. If we would have got above that with follow through, let's say we retrace to the 50% retracement, and we saw 840, then that would have negated the bear flag. But because we did not get above that $8 level in the 0.32 key resistance, then we came back down, lost our higher low there at 677, and then we failed to confirm the bear flag. Downtrend was already prevailing as well. So high, low, lower high, and lower low. There was a bear flag there, I believe it was. If not, maybe it may have been a bull trap, I think it was. And then we came down and we saw another daily bear flag confirmed. So not looking good at the moment. Closed at the low of the day. We could easily see, like I said, another 16 to 17% of downside as we look for daily oversold territory. I think that's going to be, again, not telling you to buy, sell, or hold, but I think that's going to be a nice area to target right here if you're looking to add. So that's all I'll say. If you're looking to add to your CGC bag, then by all means, that might be a wise idea to scale in at that level. Plus you have your daily bear flag targeted there of 535. So at the moment, what you could do is maybe potentially you're looking for a swing trade, right? Just kind of thinking out loud here to kind of show everybody how I would, approach things, and using technical analysis and then also fundamental analysis. We don't really have anything going on right now in terms of news, and we're basically just at a standstill until July 22nd when the comment period ends, right? So again, all of this combined, the S&P 500 is at all-time highs, and we're dropping to lower lows and confirming daily downtrends and bear flags. Not a good sign. And as I've been saying, I think crypto, once that tops out, big tech, AI, then we'll start to see MJ could drop quite a bit because right now it's not in a good position, which again tells me we could easily see another 10 to 20% of downside from here. But if you're looking for a swing trade, might not be a bad idea to start looking to play off $5 psychological as well. So you could maybe, there's so many different ways you could do it, right? You could structure it. You could do it in 3 tiers. You could add a little bit at, $5.40, another at $5.20, another at $5, and then set your stop at, $4.79 or something like that. Depends on how much risk you're willing to take on and how much money you're throwing at the trade, right? Because if it's a lot of money, you're going to have a lot less risk. You'll want something with a lot less risk, right? So if you're using a little bit of money, maybe you can tolerate, putting a stop loss 10, 20% below. So just thinking out loud, but another way to play it would just be to enter one position at 535 and then look for a daily bounce and a lower high here on the daily time frame as the most likely scenario. And then, maybe we come, play off that $5 psychological support level. So that's how I'd be looking at it. We also had a very early heads up here on the weekly time frame with the stochastic. So what do I always say on this channel is I look at this pattern and it usually is correct over 90% of the time, I would say. What you see is you track the 10-week moving average, you track the stochastic and the MACD on the weekly time frame. What you normally see after a big move is the stochastic crosses first, then the price loses the 10-week moving average, then we see the MACD bear cross follow through. So that's exactly what happened here. We had the stochastic bear cross, we lost the 10-week moving average, then it crossed bearish. So, and then exactly in this instance, we had our stochastic bear cross. That was our first clue. Then we lost the 10-week moving average. Then we had the MACD bear cross follow through. And then we saw a lot more downside. So again, using all of these patterns and indicators and different types of technical analysis tools, you can get the most likely scenario and prepare yourself either financially with a buy order or even just psychologically, right? Because it definitely helps knowing when things are looking downwards. And if we take a look at MSOS, just as another example, it lost its 50 weekly, but it's gearing up for a first ever weekly 50 and 100 bull cross. So that's looking really good, but it did lose its weekly moving averages. Why am I showing you that? Because it's telling us what the rest of the sector is doing. We also got pretty extended to the downside below our 200-day moving average, and we're potentially gearing up for a death cross with the 50-day, the shorter term above the 200-day, the longer term. When those cross on the daily, that's a death cross, golden cross the other way. So again, just showing you what could potentially happen on CGC. Well, you see how far we got below there. Well, we're already losing it. We're piercing down below the 200-day moving average. So by that logic, again, it's saying around 5 to 550. So again, lines up with our other confluence and patterns and signals that are saying 535 and daily oversold, right? So again, as you do this more, you can start to, I can look at a stock now and in 5 minutes get a pretty good idea of where it's going to go. And I'm usually right 80 to 90% of the time. And then again, MSOS lost its 50 weekly. So we take a look at CGC's 50 weekly and we're right there. So we're close to losing it. And again, if we lost that, that'd put us right around that 550. So a lot of confluence, and that $5 psychological level is going to be very important as well. So that's just sort of my thinking when it comes to the chart at the moment. And then, $5 should act as very strong support. But what they like to do is a lot of people are going to be waiting for that trade, right? So $5 psychological, they're going to go stop loss hunting, in my opinion, if we do get there on this leg down here, because a lot of people would put their stop loss under that. So just keep that in mind. If you do set a stop loss, you'll probably want to allow a little bit of wiggle room here. But on the monthly time frame, it's, as I said, for the past few months, we are still in a monthly downtrend. Anything under 1920 was just a monthly lower high. And here we are, we topped out at 1492, and we're starting monthly consolidation. And again, a lot of other names in this space, including MSOS, was in a monthly uptrend, and it confirmed its monthly uptrend for the first time in history. And then we lost it here with a break of 730, but we're back within that range now. So this could be a bear trap. So I wouldn't worry about the lower wick there. That's very common. I would just look at the real candle bodies when we close, and whether or not we close that candle under 730, that would be concerning. So that's what I'm looking at. And again, if it was confirming a monthly uptrend and had higher lows, well, the chances of CGC being a laggard were very, very high at the time, right? Because the sentiment was very low on CGC until they really started the exchangeable share structure. So this was huge, and they had the reverse split there too, right? So they did a 1-for-10 reverse split. So we were a monthly inside bar. This was a very telling candle here. Whichever way we broke up of this multiple monthly inside bars, actually, once we lost support there at 820, we started monthly consolidation, and at that point, we're just looking for a higher low compared to 276, right? So that's that's the range you're working with, right? We could easily pull back 67% and just be looking for a monthly higher low, and then a potential trend change. That's hard to say sometimes. Trend change. I'm just still rattled. I'm so rattled. I can't believe they lost. It's so brutal. For those who don't know, I live in Edmonton, so definitely heartbreaking. But yeah, weekly time frame, weekly EMA 12 and 26 bear cross. So as you can see, the chart is not looking good at the moment whatsoever. So going into it there, thanks again for joining me on the Pursuit of Wealth. It's Rod with Power Group. Let me know what you think of this in the comments section below. I know it's tough, but the great news is I think that a bottom is just around the corner. We're going to probably see another 10-20% of downside on some names. Some will hold up better because they've already been hit. But I think leading into July and August is where we're going to really start to ramp up, and I think we're going to continue to see euphoria in the broader market. And that's only going to help. Then we have Florida. I think that's going to get passed. We're going to probably see rescheduling before the election. All of these things, right? Germany fast tracking, Pillar 2, Canada looking at lowering excise taxes. If 280 goes away, so does some of the excise tax, in my opinion, in Canada. All right, going to end it there. Hope you have a great night. Sucks for the Oilers, but we'll get them next year. All right, take care. See you on the next one.